All right, traders, it's been a phenomenal trading week utilizing the key levels and reactions and confirmations that I spoke about in my previous videos. I was able to maintain a 3-day in a row green streak. With that being said, this is going to prepare you to trade the SPY for the rest of this week. We're going to be going over the key levels, when to be buying puts, and the key levels, when to be buying calls. This is going to show you how to identify when the bulls and when the bears are in control. We're going to be going over everything you need to know about the price action of SPY, and I'm going to show you how you can profit off of these key levels. Let's get straight into the analysis. So what we need to go over is the new key levels. This is going to be a very important level that we're going to be discussing throughout the bulls and bears. So in terms of today was a slow, overall choppy, lower range day. It's been extremely volatile within the market since I'm right here, since November 30th. Today's the day where things finally slowed down a bit. You could see right here when things started to slow down a bit for 2 days in a row, a major trend reversal occurred. That was due to the news and the speech, of course, that came out. But with that being said, these are just some things to be aware of history repeating itself and potential reactions. But what I want to go over is some key levels. So this is what I want you to be aware of right now. This is a 30-minute chart of SPY. And in order for the bulls to reverse the trend, right? So for the bulls to reverse the trend, for the bulls to take control, what would need to occur? This would be the new key level. We're going to call it $394 and $396. So this is my current opinion. My current opinion is the bears will remain in control for the time being as long as they can stay below $396. Now, for true strength, they need to stay under $394. If the SPY keeps chopping around that $394 to $396 range, it is going to attempt to have a trend reversal and it's going to attempt to go micro bullish. So the main thing that I want you to understand is in terms of bullish reversals, for that to trigger, in my opinion, $396 has to break out and it has to turn into support. Why is it that I say 396? Because you can see right here, 396, this is resistance. You can see right here today, 396, resistance, right? 396 resistance. We got a lot of resistance at 396. But if you look at the SPY, if it can break above this 396 level, there's not a lot of resistance. Look at what happened here when it broke out past 396. It absolutely exploded. Now, it's not going to explode that quickly if it were to break above 396 and turn that into support, because this was due to, the speech, the news event, etc. However, this is a key critical level. So in my opinion, the bears remain in control. Now, what can flip the trend and what can cause the bulls to gain control and what can cause a crazy move to the upside? 396 has to break out and it has to turn into support. Until then, bears remain in control. For true strength on bears, they need to stay under 394. For true strength for bulls, they need to quickly break out past 396 and turn that into support, or it's going to continue to get overall choppy and overall a little bit more downside to come on the SPY. So our key zone as of now is going to be the following levels. 393.16 to 394. That's a key overall range zone. So I'm going to set a price alert. We're going to set one below 394. I'm going to set another one below $393. These are going to be some key levels that I'm watching for tomorrow. Now, another key level we're going to set is going to be 396. And let's talk about downside potential right now. So in terms of downside potential, if we can go green to red on the SPY, and if we can start to turn the previous closing price 393.16 into resistance, where will the SPY be on track to crash to? The SPY will be on track to crash to the next support level, which is at 391.60. Now, if it goes under that, where will it crash to after that? $390. There is a lot of key heavy support at $390. You can see right here, 390, 390. If it goes below that, this is where things get extremely interesting. And this would be one of the best levels to dip by the SPY for a short-term spike, for a short-term reversal, right? So save this level. It's going to be this. This is what we call a gap breakdown. This 385.64 to 386 zone. This is a very heavy support zone with nice upside potential to, I would say, $392, right around that, if it were to bounce off of that. So it's got some nice upside potential. What I want you to understand is the initial reaction, if it does hit 386, the initial reaction should be bullish. It should be a spike. It should be a pump for the short term. Not saying a major trend reversal, but it should have a nice initial bounce off of that move. Now, if you see it react bearish and if you see it crack, this is what we call a gap breakdown. A gap breakdown is when a stock gaps up and then you take the low of that day on that stock. So for example, SPY, the low of the day when it gapped up was at $385.64. If it goes under this level, there is no support, so it's going to start to fill the gap. There's a gap to fill below 374. You don't milk it and ride it all the way down to fill the gap. What you do is you start to lock in profits at some key levels. Every time it drops about $1.50 to $2, you start to lock in gains. Another way to do it is, once you see that the previous support levels are no longer reacting as a resistance. So for example, when it cracks this, it's going to get to a point when it bounces. When it bounces, it's going to form a lower high. When it stops forming lower highs and then it starts breaking above the first lower high, that means it's going to try to shift in a reversal and the puts are going to get absolutely wrecked for the short term if you're day trading them. So that's when you know you have to get out. But automatically you should be locking in gains on the dips as it's falling and not, sell your entire position as it's ripping potentially, say it goes above those lower highs. You don't want to be in full size. You want to be in like 20-30% size if you're trying to milk it further. And then you get out of that last 20-30% size when those lower highs start to break out, when it's no longer forming lower highs. That's how you can identify when the trend is starting to shift. So what you need to understand is, in terms of bearish theory, we need to stay below 394. And it needs to go under 393. If it goes under 393, we go to 390. We will likely see a bounce at 390. We will also likely see a bounce at 386 initially, right? 386 would be the best price to dip by. Once 386 does crack and react as a resistance, then it's going to really start to downfall to fill the gap. Best price for calls in terms of three potential call opportunities would be 374.13 at the gap. That's the best level. And $386, that's a key support level. And also 390. Those are all micro scalping opportunities. The best levels would be 386 to 374. And you'd be using very, very tight stop losses in those situations. And I would not be expecting a major trend reversal at those levels. Those are quick scalps where you get in, get out, say it gets $1.50 spike in your favor. You make 20, 30, 40% on calls. Boom, you sell, you lock in profits. Those are levels where we should attempt to see a small bounce initially. So a small bounce initially, the first time it hits, it should see some sort of small bounce. If you want to play it safe, go with the lower levels and not the 390. Now, in terms of bull theory and in terms of trend reversals, to see that trend reversal occur for the short term being, the bulls need to break above 396. If it can break above 396, then we're going to go to about $399 to $400. That'd be the next level. Your best level for puts in terms of resistance would be at 407 and 402.60. So what are the best levels for puts? Best levels for puts, save these levels. Some of them will trigger into the rest of this week, into next week. So write these down. 406.91, gap close reversal, best level possible for puts. 402.60, we should see an initial rejection, right? So if it hits 402.60, the bulls are going to try to gain control and they're going to try to fill the gap, but we should see an initial small pullback initially at 402.60. So pay attention to 403 puts. If they become out of the money, a small move above 403, pay attention to that situation. Now, in terms of lower levels and the key breakdowns, you got to be careful here because we are getting lower, much, much lower within the channel, and you don't want to get caught up in a squeeze. If 393 cracks, we go to 390, right? So if 393 cracks, reacts as a resistance, we go to 390. And then in terms of call theory, you can pay attention to 390, but your best level for call would be 386 to 374. Save all those levels. Excuse me. Best level for calls, 374, 386, 390. Best level for puts, 407, 402.60 to 403 range. And then you want to pay attention as well to 396. 396 is make or break level. If it reacts as support and breaks out, it's going to have a bullish trend reversal. If it reacts as a resistance, it's going to get slapped back down to 393. If 393 cracks, we go to 390. If 390 cracks, we go to 386. Those are all the key levels. That's what you need to understand about SPY. What you're looking for is, if you're playing one of these levels on the downside, you're looking for a rejection, a bearish confirmation, a roof, a ceiling, right? Bearish candlesticks, lower highs, strong rejections. If you're playing one of these levels for calls, you're looking for support, you're looking for a floor, you're looking for bullish confirmations. The lower the level, the better for calls. The higher the level, the better for puts. Write that information down. 374.61, 386, make or break level, under 386 puts, above 386 calls. Initial reaction should be calls. If it flips bearish, then puts, because it's a gap breakdown level. So your true special levels, 374 is a gap close reversal, 386 is a gap breakdown, initial reaction should be bullish. Then watch for a bearish flip, whether it's days to come, just wait for the bearish flip, reacts as a floor first, buy calls. Once it reacts as a roof, you buy resistance. So these are very special levels where big moves are going to occur. I'm telling you, 385.60, very special level, big moves are going to occur both ways. 374, very special level. It should be a one-sided call move. 390 is an okay level. 393 is an okay level. Nothing too special. 396 is a make it or break it level, and 407 level, right? So if we were to narrow it down to the two best levels, for the four best levels overall to be trading at, 407, 5. So 407, 402.60, 396, 386, and 374. Those are your true best phenomenal levels. And we went over the other levels as well, right? But the levels that I just mentioned are like make or break levels, gap breakdown levels, gap close reversal levels. Those are special levels with key support, key resistance. That's where you're going to see the volatility. That's where you're going to see the big moves happen. So pay attention to those key levels. Set all your price alerts. I got all my price alerts, laid out here. So, yeah, make sure you guys are prepared, because into the rest of this week and into next week, we're going to see some crazy moves, right? So, it's likely going to be a little choppy, but just pay attention to the levels in terms of your short-term levels, 396, 393, 390, 386. Those are your four short-term levels. And like I said, for your macro levels, pay attention to 407, 402.60, 386, and 374, right? So with micro levels, macro levels, that's going to be the game plan. Let's absolutely crush it into this week. Make sure you're using those levels. So in terms of the way I'm scalping at these levels, if it's at a macro level where a bigger move is expected to occur, then I look to hold it a little bit longer and I aim for a bigger win. But I'm always locking in gains on the way, never trying to predict the exact top or exact bottom. So when I'm buying puts, I'm always locking in gains as it's falling, not as it bounces, right? And then, as I'm buying calls, I'm always locking in gains as it's ripping up, not when it falls back. If you do that, you're going to be selling too soon, but you're not going to get theta crushed, and you're not going to get caught up in a nasty reversal where you lose a lot of gains, right? I much rather sell too soon in that sense. But just know with the macro levels, the moves are bigger and they're better levels to be trading at. So you can aim for slightly bigger wins, but I don't hold those very too long. On macro trades, I probably hold for 30 minutes to an hour max, right around that zone. For the micro levels, for the levels that aren't as good, I will trade those as well, but those are super laser quick scalps. Not the best levels, not the greatest trading opportunities, not the best strategies, smaller wins. But I do trade those as well, and I don't hold those long. So in terms of those, I will hold those for about 5 minutes to 20 minutes usually. In and out, playing at the money strikes, getting in, getting out, right? And what I like to do is I like them to be aligned when the strike price becomes out of money. So let's say I was buying puts on the SPY. And SPY looked bearish at 393.16 at the previous closing price. It dropped under 393.16. It went to like 392.90. I would wait for it to pop back up out of the money on puts, and then I would buy those puts once they become out of the money, and then I ride them back down to in the money, right? So that's one thing that I like to do, and I do the inverse with calls as well. Now, in terms of your laser scalps at not the best levels, 5 to 20 minute holds, and you have to be selling into the rips on calls and into the dips, on the puts. And another thing that you have to do is you have to be laser quick. Make sure your broker is set up the right way with the hot buttons and everything. And you got to be super laser quick with these scalps, right? So in terms of profits that I'm aiming for on those, like a dollar move. If SPY drops a dollar in my favor, I look to get out. If SPY spikes a dollar in my favor, then I look to get out, right? So about a dollar move is what I would say in terms of the SPY's movement price that I'm aiming for those. On the more macro trades, I'll look to get $1.50 to $2, sometimes a little bit more. It all depends on the situation. But those are the levels, guys. Make sure you write them down. Make sure you set the price alerts. I will see you within the next one. Next video is likely going to be posted next week on Monday. So I will see you guys then.